Hi, welcome to On the Edge. I'm Max Keiser. I've got Charles Hugh Smith in the studio. He's the mastermind behind of2minds.com. He's the author of Survival, Structuring Prosperity for Yourself and the Nation, and this new book, Investing in Troubled Times. Charles Hugh Smith, welcome to On the Edge.
Thank you, Max. Glad to be here.
Charles Hugh Smith, I think people are beginning to understand that the crisis, which is 3-4 years old now, is really focused on these banks and some of the awful things they've been doing. But I want to go back and give this a broader picture and look at something that people talked about for years without looking at it too closely, neoliberalism and the Washington Consensus. Those two things go together. Can you give us kind of the big picture look at that policy initiative, that idea, and how it feeds into our current crisis?
Excellent topic, and I think I would say that neoliberalism and the Washington Consensus, the basic idea is to open markets in local economies, national economies, and open them up to global markets and global pressures. And that is the benefit was supposedly that consumers would have a broader range of products and services at lower prices due to global competition. And the second part of that ideology was that sovereign governments would relinquish many of their controls over capital flows and ownership of local assets such as electric companies and so on, that all that would be sold off into the global marketplace to increase competition and therefore lower prices for the consumers in each nation and locality.
Right, so the markets would triumph over all other economic schools of thought, you could say. That simply by turning things into a market, that you're introducing some efficiencies and decentralization of decision-making that is beneficial to everyone as a whole. But what people didn't understand was that if you're able to manipulate the market, then you can manipulate all the policies that are being based on that market. And we're seeing that more and more as it's become easier and easier to manipulate these markets. Isn't it true that with the advent of derivatives, it just becomes easier to manipulate markets?
Absolutely. And you could add the whole spectrum of financialization is what I call it, which includes leverage, derivatives, piling debt on debt on debt, that whole process. Then we ask, well, if this is failing, and clearly it has. In other words, instead of competition, we now have cartel or crony capitalism in which the vast majority of the capital is controlled by a handful of banks and other large global corporations, and the sovereign nations have sacrificed their sovereignty and are now politically controlled by these global corporations and banks.
So neoliberalism is you could say the latest chapter actually in a long history of economics going back hundreds of years. And of course you had the huge break back in the 1776 period. You had both the Constitution of the United States and the publication of Wealth of Nations by Adam Smith. And that was part of the Enlightenment and part of the school of neoclassical economics, which gave us the invisible hand and the idea that markets were efficient. Another contemporary of Adam Smith was David Ricardo, and he had this idea of comparative advantage as it relates to trade. Now, what happens to the comparative advantage when you have a country like China admitted to World Trade Organization and a company like Apple that's able to brand their products in California but manufacture under near slave labor in China? Is that consistent with that notion, or is that something different?
That's an excellent question, because it allows us to see the difference between comparative advantage in a classical sense, which is some trader goes to China and engages a firm that's owned by the Chinese and operated by the Chinese, and they make their own decisions on allocation of capital and labor, and then they offer a product which is the trader then ships back to other markets and then makes a profit as a trading business. But now we have these enormously wealthy corporations and banks which can then go in and buy local assets or control them, and that's what's happened in China. The government there is, of course, influenced by the same concentrations of wealth and political power as any other, and so Apple goes in and either buys outright a company that then hires the Chinese at dirt cheap labor, or they arbitrarily close that factory and move it to Vietnam because if it suits their profit.
So the world trade, for the most part, has become a zero-sum game where the only cost advantages and value added happens in the currency trading market, in the forex market, through the banks. And now you've got America and the U.S. involved in a trade war, but it's not really trade they're talking about, it's the currency valuations. And America wants the Chinese currency, the RMB, to appreciate as a way to help America's export market.
Yes.
Now, America's calling China a currency manipulator. What are your thoughts on that?
I think it's a bit of a ruse that to hide the actual mechanism of trade between China and the U.S., which is mostly that companies like Apple, they control the whole process, what the means of production, and to use a Marxist term, of production in China. They own the company, they own the whole procedure, so the vast majority of that profit flows to Apple, not to the Chinese. And so if we ask how much of the Chinese exports do the Chinese actually control and own, it turns out to be a rather modest sum. And so this whole huge flow of products from China to the U.S. actually benefits U.S. corporations immensely. And so the ruse is to make it appear that the Chinese are somehow engorging themselves with immense profits based on this trade with the U.S., and it's actually the U.S. corporations who have skimmed most of the profit.
Talking about China also, of course, people automatically associate the neoliberal model, the Milton Friedman school, with Republicans. And yet during the Clinton administration is when we saw a lot of things happen that contributed to today's crisis. Number one, of course, they admitted China into World Trade Organization. Was that at an appropriate time, a good thing to do? Was there maybe some more examination needed, or what's your thought about that?
Yeah, I think the Clinton era you mentioned, of course, deregulation of the financial sector went hand in hand with that entry of China, and I think it certainly fits into the neoliberal model of deregulating financialization and allowing free capital flows and allowing the exploitation, if you will, of workers in other countries, which is kind of what globalization is all about from one point of view. The alternative vision would be to see that trade in a classical sense is beneficial, or could be potentially beneficial to people of all countries, but only if the sovereign states themselves control the assets and the capital flows. Once you allow Apple or any other company to own your political process and have unlimited capital flows, then you've relinquished your own control over your own economy.
Okay, so we have globalization of capital and finances for corporations and banks, and they're not charged for these transactions. They're not taxed on these transactions. It's an opaque shadow banking system, as has been described. And yet individuals themselves, workers, to get over borders to seek jobs, it's extremely difficult to do. So humans are kept in these regional sovereign pens, prisons, but capital can roam free. Capital is free, but the people are not free. And part of this goes to what happened during the Clinton administration in the deregulation that came during that period, including a very interesting piece of legislation, the Commodity Futures Modernization Act, which legalized gambling on Wall Street. Talk a little bit about that.
You summarized an excellent point about that labor is actually limited, and capital is free to roam and exploit or make use of whatever comparative advantage it can find. The financialization that you mentioned, that process is like another layer of what you might call parasitic activity on top of the globalization. So now, in addition to moving their capital around to earn the highest return regardless of the wishes of the people in whatever nation they're investing in, they can also leverage those investments and into a whole financial scheme. So the opportunities to build an inverted pyramid of financialized gambling on top of other people's economy has now been opened.
Another major legislative coup by the financial, neoliberal, transactional-oriented folks was the elimination of Glass-Steagall. Now, during the current crisis, people are saying we need something like Glass-Steagall back again. This was, in fact, repealed during Clinton, and is there a possibility of it coming back?
One would think so, and I believe the original bill was less than 15 pages long, and then this gargantuan travesty of a mockery of a sham of, financial reform was like thousands of pages long. So right there, that shows that if you wanted to manipulate the legislation in your favor, you'd have the 2,000-page bill and not the 12-page bill. Mm-hmm. So will the American people ever demand like a clean-cut, understandable, functioning, transparent financial reform? We can only hope so.
Charles Hugh Smith, you recently wrote a very interesting piece called Imagining a Middle Class Does Not Create One. And I want to touch upon this because I think it's very important, especially for a global audience. In different countries around the world, they have different standards for what constitutes a middle class. People in China are very aspirational. They want to get into the middle class, etc. In the U.S., the government talks at length about the middle class. But yet what they're talking about is something that has, over the past 20, 30 years, been disappearing. Continue on your essay on this a little bit.
The middle class is an important terminology, I believe, in around the world because it describes the group of people who are politically supportive of the status quo and who have a certain measure of financial security. And in addition to those two features, the third feature is they feel positive about the future. They feel that the lives of their children will be better than their own. And so it's in the United States, it's been critical for the status quo to convince people or persuade them that they are still middle class, even though those three features are no longer hold true. Their incomes are declining. Their houses have lost most of their value. Their jobs are far more insecure than they were 20 years ago. And it's generally recognized the lives of their children will very likely, if not guaranteed, be less secure and less financially viable than their own. So the middle class has failed, in terms of its definition. And yet to persuade people that they are still middle class, rather than fix the problems that have caused the decline of the middle class, the status quo is simply trying to persuade them that everything's fine.
Right, so it's propaganda.
Yeah, basically propaganda, yeah.
And we see it coming out of the financial press, the CNBC-type networks out there who don't address this issue. We see it coming out of the speeches from Washington.
Yes.
It's almost as if there's the top 1% that controls an enormous amount of the wealth, something like 40 or 50% of the wealth, if not more. And then you've got the prison population, mm-hmm. and then you've got people who are not yet in prison, and those are the middle class.
Or as we've discussed here, that they are in a sense financially imprisoned, sort of financial, what we would call debt serfs. In other words, they labor every day simply to pay to service the debt that they've acquired to maintain the illusion that they're middle class.
Well, you have used the phrase, which is catchy. I'd put it right up there with Matt Taibbi's vampire squid to describe Goldman Sachs. You are referring to the Europeans as a neo-feudal kleptocracy of 500 million debt serfs. Expand on that a little bit.
Well, I believe that Americans are, most of the American middle class, anyone that owes money for student loans, which is crushing millions of people, or bloated mortgages are crushing tens of millions, most Americans are debt serfs too. And the debt serf idea in Europe is that those people that live in nations that are being squeezed by austerity are seeing their livelihoods decline in order for their nation to make interest payments on debt to global banks. And then those nations in Europe whose taxpayers are seeing their taxes increase in order to fund those same banks, they're also debt serfs, only via taxes as opposed to servicing the debt.
Okay, so there's 4 scenarios, as I understand it, for the euro. I see A, Greece withdraws. Mm-hmm. B, there's a North and South euro. They split the euro in two. Mm-hmm. C, Germany leaves the euro, or D, they muddle through as is. Which of those four do you see as being the most likely?
Muddle through is probably the most likely, but in a way it looks like they're just following in the Fed's footsteps, like creating money out of thin air to buy bad debt, to create the illusion that it's all going to somehow settle out without ever having to renege on that debt or write it off. And of course, that's just not possible.
So they're introducing a stability fund, multi-trillion-dollar stability fund, and then a few days later they say, well, we want to now be able to leverage that stability fund. So they want to be able to create another one of these huge Ponzi schemes based on, and then isn't this just going to be a situation where they securitize Greece's debt, they sell it into the stability fund, and then they leverage it up by 10 or 15 times as the basis for the capital that they'll need to bail out Greece again, right? So isn't this just like a Mobius strip where they're just self-referentially printing money and calling that the collateral upon which they are basing the extension of the program to print money?
Yeah, I think you've absolutely pegged it.
Okay, so what happens to gold and silver?
Well, as we all know, gold and silver has numerous influences in terms of price, including, no doubt, official or quasi-official manipulation. Because in the general consensus, it's understood that gold is a reverse image of currencies. In other words, as currencies lose, as people lose their faith and trust in their currencies, then demand for gold rises. And so for the status quo, rising gold is dangerous because it could potentially bring down their campaign of perception management, that everything is fine and gold is a worthless relic, and we're going to get rid of all this debt by printing more money and creating more debt. And so if gold rises, that whole scenario is called into question.
What's in shorter supply right now, gold or silver?
I have no idea.
Okay. The reason I ask is that there are, by most reports, about 1 billion ounces of silver trading around the world. At current prices, that's the $30 billion worth of silver, which is microscopic in size when you compare it to like a Walmart or an Apple worth $300 billion. There are reports now suggesting that this artificially cheap price of silver, maintained by either official or quasi-official policies, and with the demand and skyrocketing as it has, and with people taking that physical off the market, that this one of the unintended consequences of keeping the price artificially cheap is that we may actually come to a point where the supply of silver actually comes to a dead stop. Mm-hmm. In other words, they are, by this, similar to what happened in the Soviet Union, when, because of the pricing manipulation that went on there, the command and control pricing that went on in the Soviet Union produced enormous dislocations and economic chaos. So by keeping the price of silver, we come to a day when suddenly the news comes out that, you know what, there's no silver at any price. Is that possible?
Absolutely. If hundreds of millions of people start considering silver the key financial asset that they can still afford, then certainly hundreds of millions of households could easily overwhelm 1 billion ounces.
Well, this is what we've been saying, and actually, for this reason, this Occupy Wall Street campaign that's gone global, by simply focusing on that individual purchase of silver 1 ounce at a time, all of the goals that they seek could be achieved with that simple action. We have about a minute left, and I want to just get into your thoughts on how this banker occupation, as we call it, will kind of come to a conclusion. What will we see happen?
Hopefully we will see a political consensus from both the left and right spectrum in the developed world that the debt has to be written off. It has to be forgiven. It has to be reneged on. It has to be written off. It has to be destroyed. And that would, of course, it's an asset to the 1% that owns, 50 to 70% of the wealth, as you say. So if we get rid of the debt, then of course we get rid of the asset base of that 1%. And that is what people have to come to realize is the necessary step to, reestablish a prosperous and productive economy.
Well, I think that's a very interesting turn of phrase that we hear all the time from the top 1%. They talk about assets, but it's only an asset for them.
Yes.
For everyone else, they have another word for it. It's called debt.
That's right.
But the financial press is constantly talking about the assets on a bank's balance sheet. Well, yes, it's debts for the plebes and the serfs. That's the debt that we're servicing with our austerity. So it's not an asset, is it? It's in that debt, that asset, quote unquote, was created out of thin air as a means to confiscate wealth. Is there any economic viable reason for there to be $600 trillion of derivatives floating around in the world?
Absolutely not. You summarized the situation perfectly.
And so finally, what is your forecast for 2012?
My forecast is that the muddle through by the status quo in Europe and the U.S. will continue apace. In other words, the idea that more debt will solve the over-indebtedness that we now suffer from. But I think that people will start waking up to the idea that debt has to be written off, completely destroyed from the balance sheets of governments, individuals, households, and banks.
So you think coming up 2012, this concept of debt forgiveness will take hold and become real?
Yes, and I think there may be different terms used for it, write-downs, renegotiations, and, politically acceptable terms, but it will fundamentally be the same thing, the writing off and the destruction of unpayable debt.
Jubilee sounds good, though.
It does, and it's a term that people hopefully will understand benefits not just the debtors, but the entire economy.
Very good. Well, Charles Smith, that's all the time we have. Thanks so much for being on The Edge.
Thank you, Max. It's been my pleasure.
All right, and that's going to do it for this edition of On the Edge with me, Max Keiser. I want to thank my guest, Charles Hugh Smith, author of Investing in Troubled Times. If you want to send me an email, please do so at ontheedge@presstv.com. Until next time, this is Max Keiser saying bye, y'all.